All right, a lot of people are joining in. Let's see, Terence join. Can't start without Terence. Nope, Terence is not here. All right. All right, I think we're ready. A lot of people back driving school. So I must have to leave back driving school bus, so I must leave early. All right, Desi, we'll start and leave as soon as we can. All right, let's start. Desi is ready. Welcome to Tradespoon in Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon in Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers, both Yellow Tunnel and Tradespoon. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy, professionally managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please pause the screen if you need more time. If you're new to trading stock and options, I encourage you to visit optionscreening.com so you understand the risks associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trading picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, some of the main concepts or pillars of successful trading, I think, is trading psychology, right? You know, I haven't seen such a discrepancy between bulls and bears, at least on institutional side, right? On the institutional side, usually everybody publishes their opinion end of the year, beginning of the year, and there's some kind of consensus. You know, the fact that Goldman Sachs thinks that we're in soft land and you know, JP Morgan thinks that we are in the recession, right? And they're basically providing the same almost reasoning. You know, it's very difficult to trade, right? There is no consensus, basically. And the market price shows that, right? In the past, since May or April of last year, we basically at the same point, right? So there's no consensus when it comes to inflation, or there's no consensus, or how long will inflation come back or not, or are we in recession or not? There's no consensus. So what do? You have to concentrate on the process, right? Process is the most important. You can be in a soft landing camp, you can be in a hard landing camp. There's no right or wrong, right? But you have to have a process. The process to me means cash. I would propose if you're soft landing, you can start deploying your cash on market pullbacks, right? Market pulls back 5–10%, you buy, right? If you in a bear camp, I would say raise cash. Every time market is at 400, 410, 420, you raise cash to 50%, right? You sell into these bear market rallies. So that's the process, right? And positions, on average, I think it should be no more than 4 positions. 4 positions with 2.5% maximum loss per position. And I would use dollar cost average and divide position into 2, basically saying that every time I place a trade, I'm not risking more than 1% of my portfolio. This way, if you're on the wrong side, let's say you're in a soft landing, right? We started the year strong. Europe is not in recession. Looks like the economy is expanding. They don't have energy crisis. They're not freezing to death. So a lot better than everybody anticipated, right? And market is up, right? So, if you're in a soft landing camp, you always have to kind of look at the worst case scenario, right? What is your stop level? So negative visualization is important, right? Going over through negative visualization. Right, and you risk no more than 1% per trade, right? So if you, let's say, long, Europe, and you think, Europe is overdone, right? Let's say you're bull and you say, okay, this is great, strong recovery, we're back to the 2020 pandemic level, we should go higher. Okay, so then you buy VGK and you put stop level, right? Every time you enter a trade, you put a stop level, right? If you're on, let's say, in soft landing camp. Same thing with spiders, right? So negative visualization is important. You don't want to risk more than 1%. Right? Let's say market right now is at 396, right? We're at 396. What did the model predict? Model predict 394 to 400 for today. Neutral trend. So basically saying, too fast, too far, right? No real opinion on the market. At 400, potentially consider selling. If we do reach 394, if you're a short-term aggressive trader, consider going long, right? And we're trying to break through this downtrend, right? We've tried in January, we've tried in November, we've tried in December, right? Kind of unable to break through this downtrend. Almost in the August. September. So every few months we try to break through this downtrend unsuccessfully. So 396, 394, you might say, if you're in soft landing camp, this is when you want to buy, right? You want to buy at 396, right? If you're in soft landing camp. If we don't hold 396, 394 level, right? This is your 394 level that market identified, the stock forecast toolbox identified, then we'll quickly retest 387. So day trading, short-term aggressive trader, soft landing camp, you buy at 394. If you're in hard landing camp, you sell at 400, right? Or 396. So, and always have well-defined stop level, right? Let's say we pulled to 396, right? You think that this 394 level will hold, and you're a day trader, right? Let's say you buy at 395. If you buy at 395, your stop level, if it doesn't hold this, I would put 393 right below that line. If you're day trading, right? Not risk more than 1% of your portfolio, not risk more than 1% on the moving S&P, right? If you're day trading, if you're, longer term horizon, maybe a couple weeks, line in the sand is 387, right? That's kind of last week low. If you break through the 387, then it opens up the door to quickly retest 374, right? And then you decide on number of shares, right? If your stop loss is at 393, and you're risking 1%, let's say $4, again, you don't want to lose more than 1% of your portfolio. So on $10,000, it's $100. $100, you can buy, $3, 30 shares. Okay, so you can buy 30 shares at 393.70. Trading options, same thing. You don't want to risk more than 1%, irrelevant what instrument you're trading. And these are the levels you want to exit. So I would consider these levels top. I think it's set, right? Well, I set it at 400. It's at 402, but for practical purposes, I think it is set. So that's your resistance one. If you're shorting and we jump above 402, we probably that opens the door to 410, right? So if you're short-term trader, medium-term trader, you don't want to risk 2%, then this is where you want to execute your shorts. Longs, again, model C is 394. I agree. That's your support number one for today, right? We're kind of quickly approaching it after the not Amazon, but Microsoft earnings, and then support to it, right? So bulls want to be able to hold on to support number one. So these negative visualization exercises are extremely important, right? They're extremely important. And I would encourage you to always do them, right? And basically not only say, here's my mental stops, I would write down in the journal, I'm shorting or I'm going long, I'm risking no more than 1%. I have 50% of my portfolio or 30% of my portfolio in cash. And then if the market reaches and you put the level, right, maybe you give yourself a little bit more room, like here's the gap, right? Oh, you see these two gaps, right? Okay, if the market drops below 391, right, or 393, depends how you choose your stop levels for day trading, I will exit this position, or I'm going to buy a hedge, or I'm going to short the market. But you write these down at 396 level, right? When the market is at 396, right? And the more journaling is important, I encourage you to keep a journal and then go through these exercises, right? Just make it as vivid as you can in terms of what you will do, right? And when you write down what you will do, then most likely this is exactly what you're going to do. If you don't write it down, if you don't think about it, your target length stop levels, you kind of really don't have an exit plan, right? So if you don't have an exit plan in a market that basically didn't go anywhere in the past 6 months, it might not go anywhere for the next, 12 months. Well, then, then it'll be hard to make money, right? So if you don't have an exit strategy before, passive investment work, right? You buy, you hold, and you just, everything goes higher eventually. In the market where for 8 months it didn't go anywhere, for the next 12 months it might not go anywhere, then that's a problem, right? If you don't have a clearly defined exit strategy. So journaling is important. These mental exercises, I think, extremely important. And I think as long as you do this for the next 3 months, take that challenge, I think you will find that your performance has been improved. In terms of earnings, we're in the middle of the earnings. In terms of market calendar, there's nothing going on today. Nothing interesting. Tomorrow we have GDP data, right? GDP data. Expectation is strong Q4. So we'll see if there's a positive or negative surprise. And in terms of earnings, again, Microsoft, it was up 4%, right? It was up 4%, and now it's down, 3%. So it made this almost 8 or 9% round trip. And everything was nice and wonderful, their decent revenue, decent, earnings, decent, cloud computing expansion, 30%, 31%. But then forward guidance is low, right? So their earnings growth is low, I think close to 2%. And they're guiding actually the earnings to deteriorate in 23. And market didn't like that, right? As soon as they said that, that's when there was a reversal, both in Microsoft and Amazon. Texas Instrument is flat. Capital Financial down 2%. Bank of America down. Boeing down 3%. FCX is down 1%. ABT down 2%. AT&T up 4%. AT&T is up 4%. I did do iron condor, right? If in the market neutral, my favorite strategy, most common strategy that you will find is selling premium, right? The market not going anywhere over a long period of time, then market neutral strategy is, cover calls, spreads, butterflies, iron condors. All of these are market neutral strategy. So General Electric, not going anywhere. Let's see. Let's go back to AT&T. and try to close AT&T. So it's going higher, short call, trading at 4 cents. So I can close it. Let's put an order to close 4. It's at 20.5. I have 20.5 strike, so 60 cents away. It has to double its move between now and Friday. So for now, I'm going to put it for 2 cents. So I'm going to try to close the call for 2 cents. And you can do the same thing with earnings because you have elevated volatility, or you can do this right, or you can do this with ETFs, indexes, with any stocks, right? When VIX is low, you have to be careful, right? One of the issues with the strategies now, with earnings strategies, that VIX is at 20, right? Everybody's complacent. You know, a lot more people got bullish, right? The bullish sentiment, the retail sentiment has significantly improved, right? So you're not getting a lot of premium. I mean, you do get premium from the earnings, but not so. On stocks, I guess with earnings, it's okay. You are taking additional risk by selling premium, but on ETFs, you just might not get enough premium. So that's an AT&T trade. I encountered where you sell call, right? I sell 16.5 put. No, sorry. Sold 18 put and sold 20.5 call. And as long as AT&T trades in that range, then that would be the trade. Texas Instrument turning negative, Boeing turning negative, down 3%. So all the earnings, everything that I'm following, all the notable earnings today, we're going to have Tesla, now, IBM, CSX, American Airlines, Comcast, Valero Energy, MasterCard. They're all down, right? Everything is down. And we are quickly approaching this 394 support, right? 394 support. And again, the word recession, right? If last year the word was inflation, everybody just cared about inflation. You know, right now nobody cares about inflation. I mean, I'm exaggerating. People care about inflation, but the stock market participants are more concerned about earnings recession. So today we have Apple, Microsoft. Today we're going to have Tesla. We'll see if Tesla gives similar, misses. We'll see. And Treasury is up. Technology is down. Again, same kind of idea, right? Market is up, TLT down. Market is down, TLT up, right? So kind of a normal correlation. I know Desi is here to know about JP Morgan. Nothing has changed, right? Their earnings were not great, and it's been trading between 142 and 133. It's down. It's only down 30 basis points when the market is actually down almost 2%. So pretty resilient. But again, I think it's just a matter of time. Yield inversion, right? The idea is that 10-year and 40, this is 56, 60, 70 basis points. So this yield inversions continue to get worse, and this is not a good environment. And yield is actually dropping, right? The yield is actually dropping. That's not a good setup for banks. And I think they should continue. They should start underperforming. All right. Meanwhile, technology, right? It's all about Amazon and Amazon, same thing. It was up pre-market. Now it's it was up 3 or 4%. Now it's down. So big reversal. Was a forward guidance, was the idea that, okay, Q4 doesn't look that bad, right? Q4 doesn't look that bad, but Q1 might look really, a lot worse than Q4, right? And Q2 might look worse than Q1. And that's what everybody's concerned. One day it doesn't set the trend. Let's watch what happens if we have a reversal, right? But that's a trade. So, okay, I'm watching AT&T, continues to trade higher. Switch AT&T. Let me know if you guys have any questions. Bob is present. Todd Desi is present. Terrence? No, Terrence. Terrence, you were late. All right. Todd, I was on time. Started promptly. All right. Todd, good morning. JPM, thanks. Ricardo. Amazon report not until February 2nd. Yes, but they do. That is true. But they have big exposure to cloud computing, right? AWS services, and originally it showed a growth, but then as soon as the CFO, it's actually not as soon, like hour into the, I actually was watching Microsoft, and I, went and started driving David to his karate classes, and then when I come back, almost hour into the conference call, all of a sudden stock reversed, and I'm like, why? And then when I went to Twitter and started researching, this problem was the, forward guidance on earnings. And the problem with Microsoft is Amazon are the same, right? If Microsoft is growing at 2%, the slowest growth since 2016, and it's trading at a multiple of 26, right? Almost, and the rest of the market is at multiple of 17. Why would you invest into Microsoft as opposed to market, right? And same thing with Amazon. If Amazon comes out and they are growing in single digits, right, lower single digits, then why would you pay a multiple of, well, I don't think this is right, but 60 or 50, right? Nobody wants to. So that's an issue. That is an issue. At what multiple should these stocks trade? Let's keep an eye on AT&T. I mean, one way to hedge, we can try to do this AT&T position. I mean, it's keep going higher, 2030, it's already, 20 cents, 1% away. So one way to hedge this position is to get into a cover call, right? So I would, 1-to-1 or half a position, but I'm going to buy, 100 shares of AT&T. And that's advantages of trading stocks within your buying power, right? So on the $10,000 account, if I'm buying AT&T, right? If I'm buying AT&T, I'm investing $2,000. I have $10,000 account. That's average account in Yellowtown and Tradespoon. That's okay. If I traded Microsoft, right? If I traded Microsoft and I did one contract, that's $23,000. That's 2 times of my equity in my account. So that would be an issue, right? That would be an issue. So that's so strike price selection is very important, and I always encourage you when you are trading options, just remember there are derivatives of stocks, and just always translate into the equity. One contract Microsoft, I'm trading $23,000. On a $10,000 account, maybe it's not appropriate. Boeing, one contract of Boeing, I'm trading $21,000. To trade, right? To trade when you're opening and closing position at the same time, you need $25,000. If you have less than $25,000, then you basically cannot open close position at the same time. Otherwise, same day. Otherwise, you're gonna get a margin call, right? If you use these proceeds and let's say I open AT&T, close AT&T, and then I decided to do a Tesla trade, you will get another margin call. So just be careful with these short-term strategies. Meanwhile, let's see, Spiders is down 1%, technology is down 1.5%. And we are off the close. So let's monitor the rest of the position. Let's see, Microsoft same. I don't know if you guys have any questions. Any questions so far? Faust, good morning. Mark, good morning. Todd bought some Microsoft shares and cashed out before it dropped. Thank you, Todd. That T is a short-term trade, right? I'm trying to just, it hasn't reached my strike price. So I'm trying to ideally get out by the end of the day. If you, it had a good earnings and you want to get yield, 5.5 yield, and, then you can hold a bit, longer, right? But my goal is to close it the same day, right? Close it the same day. I got close to closing basically the gap. And I would watch this support right around 1976. Again, the goal is to close the short call. If it does pull back, let's say to 20 or 1970, 80, close the short calls and then wait for the stock to appreciate. All right, Tesla is down, now it's down. Let's look at the spiders. Of the session lows. All right, let's review the rest of the positions. Let's see. All right, so it's up 10 cents, right? It's up 0.5%, AT&T. Let's me look at my position. The idea is to, close in the green since it is approaching the strike price. So, at this point, overall, I think it's positive. So we'll just watch. All right. And if you do trade Microsoft, I think we talked about 225 put, right? 225 put. We're still away, but it's continuing to deteriorate in price. Any question? What is your strike price selection? I chose 20.5 call because I received 7 cents, right? So my goal is 0.5% of underlying stock. So I got 7 cents on the short call, and I got 8 cents on the short put. So 15 cents. 15 cents on the $20 on the $19 stock. It's about 75 basis points. So my goal is to make 0.5%, right? Or collect premium on usually 0.5%. There's the hedges, which you might or might not want to do based on your account value, but I always hedge. But the goal is 0.5%. If I can make 0.5% by holding position one day, then that will be good. All right. Let's continue looking. All right. Okay, Capital One Financial, similar to Synchrony Financial, right? Down 2%, now turning positive. Microsoft continued to deteriorate. Texas Instruments started to turn south. Boeing recovered some of the losses. FCX has the earnings announcement conference, I think, at 9 a.m. All right, let's see. FCX. Right, so 9 a.m. 9 a.m. So that's why I've got to watch the FCX. Let's see, Tesla continued to drop price. So Tesla is announcing earnings. Let's see how this sounds. Sounds okay. So Tesla, kind of in sympathy, turning south. CSX, so railroads, industrials are under pressure, sitting the key support, I think, in sympathy to UNP and NSC, UNP, NSC, NSX, no, NCX, so NCX. And Norfolk Southern, yeah, NSC. NSC announced earnings. Let's see what they're about to announce earnings. Yeah, they're down 4%. So railroads are under pressure. Kind of, railroads used to be kind of a leading indicator for the economy. MasterCard looks like it's holding on to its gains. Let's see. AT&T 2020, Boeing slightly negative. Microsoft Texas seems to continue to deteriorate. Let's see, Spiders. It's session low, right? Spiders continue to make new lows. So we're on its way to retest 394, right? 394. That has been support since January 9. So pretty strong support around 394. Let's see if bulls can hold on to these levels. You show this. Jerry, thank you for suggestion to identify iron condor. I mean, I will add it to the development queue. Thank you, Jerry. Tesla earnings after the close. Money managers analysis this more bearish, only one bullish. I personally think on all of the stocks, I am, you know that I've been bearish for the past 12 months. So when the market is overbought, especially when the market is overbought, and Tesla just rallied, 30% or however many percent, right from the bottom, they just 40%, right? So they rallied 40% from the bottom. They have to have good earnings and good guidance, right? Based on their price cuts and based on the weak retail numbers, I'm going to assume it's not going to be a stellar earnings. So I think the risk is to the downside. I mean, Microsoft was up 4%, now they're down 4%. It could be Tesla, could be volatile too, but I think the risk is to the downside. My opinion, Tesla is trading at a very high multiple, right? 44. And if they're not growing, right, and maybe they have record earnings, right, but it's still, they're growing at a slower pace, not a double digit pace, then it's a problem. And I assume they cut the prices in Europe and China and the United States because people are buying less cars. So I think the risk is to the downside. I mean, it is down significantly, right? It could be one of those LI Financial, where it's down so much that people just tend to ignore, and then it's just up 20%. So it could be something like that. But I think this is an outlier, right? From all the stocks so far, we're getting probably by the end of this week, 25% of the companies announce earnings. Only LI Financial and TSM had this huge rally beyond the estimated move. Everything else, it kind of, sold off. So that's my take on the Tesla earnings. I think, the risk is to the downside. Let me know if you guys have any other questions. And energy is also continuing to pull back. Halliburton, let's see, Schlumberger. Let's look at spiders. So yeah, it looks like we're continue to deteriorate in price. Right, let's see AT&T. I want to close the call. But still, okay. Still out of premium in those options. Okay. We'll wait. Discord guys, let me know if you have any questions. Blue Matrix. Okay. So at 394 level, let's look at. So Microsoft is down 4%, X is down 2%, Capital Financial is flat, Boeing down 1%, FCX is down 1%. FCX. Okay, looks like it started the earnings. FCX options prices dropped as soon as the conference started. So let me see. CX. Okay, so FCX is out. All right, Microsoft. Is Microsoft stabilizing? So I didn't do it in Yellow Tunnel account or Tradespoon account, but okay, it looks like it's finding some footing. But I did suggest 225 put. That's a put that I have. It's still $7 away. I mean, what a trip, right? 4% up, 4% down. Yeah, and I would watch spiders. Okay, any other? June vertical spread, Jerry, I'm planning to hold on for quite some time, right? You know, at least, you know, probably through March and April. March is a different question, right? So March, I mean, one day doesn't set the trend, right? We're still in the middle of the earnings season. We have Fed decisions. So I'm going to hold on to March position in this week and then early next week, right? If the market is weak, then there's no reason to close that position. But if we are approaching 410, if we do break above this 402 level, I would have to close my March positions. So probably first, second week of February. So in about 2 weeks, 1 or 2 weeks. In 1 or 2 weeks, I'm planning to start closing my March position. So let's go over them. Is there any premium in this General Electric? Let's see. I still have the General Electric. What's going on with General Electric? It still has value in these calls. Okay, fine. So IWM, no changes, right? No changes. March position kind of just waiting. I mean, one day doesn't set the trend. You know, for now, bulls are in control. So we'll see. We just have to wait and see what happens the rest of the week. But it looks like, right, it's unable to break through this overhead resistance, but I have March positions, so the clock is ticking, right? The clock is ticking. On June positions, I'm more confident. March, it's a race against the time. So it all depends on the Fed meeting and this week and next week earnings. NOC, start adding to NOC. Looks like it start building the bottom, right? It looks like it start building the bottom. Right, it's above this, for a week it hasn't made any lows. I think this is a good entry point. So 440 is probably your stop level. That would be, would be a head scratcher if it drops below 437 significantly, right? But for now, I added to NOC position. Shorted QQQ. Let's see, what was the last entry point? I might wanna, let me see, QQQ. So I sold short at 282. It's trading at the same level. So let me close it. Let's see QQQ. Let me put it in order. So I've been trading around this position. If you're not comfortable hedging using options, one way is to short the stock or ETF or buy inverse ETF. If you're not comfortable selling short, then you buy PSQ. Same strategy, just the comfort level. But they're all one-to-one correlations. So I did sell at 282. So we'll see if this is the top. Probably, right? It's back to this downtrend. We're trading below downtrend. Next level would be 276. Probably so 276. So let me buy back these shares. Buy to cover. If we reach 276. Okay, so that's my QQQ trade. I do have March position, right? 280, 290 call, 250 to put. I mean, we're back to the downtrend. Obviously, 50-day moving average is the support. I would watch 274 level. We'll see with the Tesla earnings. I assume if Tesla is similar to Microsoft, it will be down. If Tesla hits the home run, we'll be back to 290. So we just have to be patient and see. But next level of support is 274. Next level of overhead resistance is 290. So these are the March. June, we have time, right? To answer Jerry's question, June, we have time. March, not a lot of time. Red risk is to the downside. What is your thinking when a trade does not trigger because it doesn't hit target T, for example? How do you decide whether to chase it or not? You have to have a trading plan, right? With AT&T, my trading plan was AT&T. It's a short-term trade, right? So I'm just trying to either break even or make some money, right, on AT&T. So right now, what is it trading at? $20.41, right? So it continues to go higher. I bought it at $20.27. So I'm making 10 cents, right? So I make 10 cents. On the short, on a long stock, I'm up 10 cents. And then on the short call and short put, I collected 9 cents. It's trading at 16 cents. I can close it for basically 7 cents, right? So I made 10 cents on the stock. I close option for 7 cents. I made 3 cents. Not a lot of money, but the trade is going against me. Might as well close it. So that would be the strategy if I'm, purely doing this as a day trading, short-term trading. Someone like John who likes AT&T and doesn't mind owning it or have this cover call and stay longer, he might carry it longer, right? As long as the size is appropriate, right? 100 shares of AT&T, $2,000 and 10. You look at the worst case scenario, right? Worst case scenario, we're going to close the gap, right? If the market turns south, we can get a reversal. We can go back to 19. So I bought it at 20.30. I get out at $19.30. So I'm down $130. That's within my 2.5%. So your strategy, you could keep it as a cover call because you want to collect 6% or 5% dividend. Or you basically just say, listen, it's at $20.40. You know, I made 10 cents on the stock. I, you know, lost 7 cents on the short call. You know, I'm out. You know, so that would be the strategy. I encourage you to decide this before you get into a trade. Fred, XLF is not going anywhere. I think XLF is not going anywhere. I'm surprised. I think it's all about Fed, right? It's going to be all about Fed. There's a big yield inversion. We are down below 3.5%. Fed is going to be next week. Banks will move next week. You know, obviously my bias is to the downside, but you know, you just never know, right? Never know. Right? If they sound hawkish, I think market will pull back significantly, right? It's already very nervous, but everybody's kind of hoping that they're gonna sound dovish. You know, so if they sound bullish and dovish, and you know, life is good, then you know, XLF is gonna rally. But if they sound same, if they sound the same as they did last month, you know, then you know, market is going to be in trouble. Most people, you know, economists believe that, you know, if they want to contain inflation and not repeat the mistakes of 70s and 80s, they're going to stay the course, right? They might not raise by 75 or 50, they might do 25, right? Not might, but 100% probability 25. You know, there's a, I think, whatever, 80% probability another 25. And then they pause. But if they don't say, listen, we're not going to, you know, last meeting they said we will not lower interest rates this year. If they say we will, market is going to rally. If they say we will not raise interest rates this year, and that's not what market prices in, market will sell off. So I think that's the key statement on the, you know, next week on Wednesday. If they make it clear that we're not, either we do not lower interest rates, so we have no idea whether we will or will not lower interest rates. That's not what market anticipates. Market anticipates inflation is under control. You know, economy is reopening. You know, China, Europe is doing good. There's no reason to keep high interest rates. You know, you need to start lowering them by end of the year. And if they say no, then market is not going to like that. Ted, do I ever do option day trades? I mean, these iron condors are kind of day trading, right? I mean, holding them overnight, but you know, sure. Fred, thank you, Ted, thank you. You definitely do day trading options, you know, single options. There are a lot of people. Any questions? Discord, go to webinar. Okay. TLT is up 0.5%. QQQ is down 2.5%. That is the trend, right? That is the recent norm, right? The recent norm is that money either go into a bond market or into an equity market. That's not been a trade last year. Last year, both went up, both went down. So this divergence, or this going back to the normal relationship between treasury and equity market, basically is the reason, because you know, when you turn on TV this year, it's just the word recession every 15 minutes, where last year it was the word inflation. So the narrative is changing, right? So now the narrative, soft landing guy says we're not going to be in recession. Hard landing says we are either already in recession or we're going to be in recession, by June, right? So that's the narrative, and based on the data, the narrative changes, right? Tomorrow, GDP is better than expected. All of a sudden, okay, the narrative soft landing, and up we go. Okay. Meanwhile, QQQ is under pressure. It's back to this downtrend, right? It's back to the downtrend. Spiders are back to retesting key support level. QQQ is the one that was leading the market. It's this big gap down. If Tesla has a bad, right? What do we have? Tesla. If Tesla has a, not a stellar earnings and kind of similar reaction as Microsoft, right? And railroads are down, and how's the semiconductors? and TXN is actually turning negative, then that would, market would be in trouble, I think. And then, I guess Wednesday is the most important decision. Softy is getting a little bit stronger. So that's good. All right, so it looks like it's rebounding. Okay, good. Gotta close my short put. What is it trading? 46 cents. So it's actually profitable at this point. So that's good. I probably want to close it. Microsoft. Okay. So at this point, you can close Microsoft put and call for profit. So in case you did it yesterday, that's one position that's in trouble. Let's see, AT&T. So AT&T, it's good that I bought stock. It worked this time, right? It doesn't always work, but I think it works more often than not, right? On the down market, AT&T is up 6%. Verizon followed through. Soft landing. Get stocks, low PE, paying you good dividend, nice cash flow. Doesn't matter hard landing, soft landing. You're gonna get a nice coupon. So that narrative works. And I can actually close it for profit now. AT&T. Okay, so let's see. Cool. Maybe start closing. So I'm going to close half of the 50 shares at $20 and see, 38 cents. Let's see what's the. So close short call. I'm going to close the stock, get out of this trade. AT&T change close for 19 cents. All right, so short put and short call collected 15 cents, close it for 20 cents. So I'm down 5 cents, right? I'm down 5 cents on the option, but I'm up 11 cents on the stock. I closed half, and let's see, close the other half if it does reach. So now my position is shorter, it's less risk. Okay, I can take a little bit more risk. All right, so I'm gonna close the rest of the 50 shares at $20.49. And if I get the position size correctly, and I look at my maximum loss, then I can be a little bit more patient. Maybe I can squeeze more. Maybe I can squeeze more out of AT&T. If it breaks out, it might get to 2050, 2060. All right. Ted, thank you. Appreciate it. Terrence, any questions? Terry. Kevin, cool. Where's John? John busy trading earnings? No, John's here. Hello, John. You're awfully quiet. Are you managing your iron condors? I assume John is busy with earnings. Okay. All right. So out of Microsoft, almost out of AT&T. So that's good. Today was a good day. And the rest of the stuff, we did talk about Texas Instruments, Capital One Financial, Boeing, FCX. All of these you can be out and just take profits, right? Because they're all kind of didn't have any big movements, and if you did them at the closing bell. So I encourage you to join the closing bell, right? If you don't have a lead service, that's what we do. You can join closing bell today, actually, if you're part of the YouTube. So click on like, click on subscribe. I don't know, we're not growing the numbers. It's still 942. So we need your help. If you haven't liked or subscribed, or we do 944, please click on subscribe. If any of these content you find useful and it helps you navigate current market volatility, please share on social media or any forums, right? We want to, the more people, we actually have 3 people watching now. So the more people can join, ask questions. Let's see, is there any questions? Subscribe, or 944. Please click on subscribe. If any of these content you find useful and helps you navigate current market volatility, please share. Hi, say something. Hi, welcome to Tradespoon. Please ask your questions here. All right. So click on like. We have people. If you can watch it live, obviously there is a recording, and we have pretty good 50, 60, 70 people watching. So that's good. So this is an opportunity to do this for free without any kind of large investments on your part. All right, that's all I have for today. Thank you very much, and have a great day. Oh, the rest of the position. So I didn't. So AT&T, we talked about. So TLT, still long TLT, right? I think there'll be a lot of movements after the Fed decision. XOP, do I have XOP spread? I don't think I have XOP spread. No, I closed my XOP spread. I mean, I'm bearish on XOP, but I closed mine a long time ago. Maybe it means XBI, biotech. Biotech, I'm kind of still in. So let's review that. Discord, guys, thank you. So XOP is obviously weak, right? It's just way too far, way too high, and if it's a recession, demand for energy will drop, right? It's a tail, between Germany reopening and getting out of not getting into recession, and China. So on one hand, people say we're going to $100 barrel, but on the other hand, if United States is in recession, then we're going back to 60. So I think it's overbought. So it will be done. I don't have that position. I do have biotech, probably the only bullish position, right? So it is down today with the market. It tried to break out of this range, but for now, I'm not concerned about biotech. Mainly not because I'm not concerned about this position. I'm just, overall, my portfolio is just a little bit too negative, actually. I have to trim my negative shorts first. So I'm kind of watching these levels and see if, how much room is there to the downside. Yeah, and I would watch Apple too. Right, Apple's next announcing earnings. I think that's, well, I think it's next week, right? Next week. All right, that's all I have for today. Oh wait, did I cover everything? Close your hedges this AM. Okay, thank you, Brad. So still bearish on XLF, bullish on XBI, and those are the only positions. All right, guys, thank you very much. Have a great day. Thank you, YouTube subscribers, for participating on YouTube. Please click on like, share the videos, and we do have a closing bell today. And I'll see you guys tomorrow morning. Thank you.